Hi viewers, are you new to the Forex market and feeling like everything is a maze? Don't worry. In today's video, I'll break down the most fundamental concepts such as lots, PIPS, bid, and ask prices, and share some practical trading experiences. By the end of this video, you'll have it all figured out. Let's get started. Lot. A lot is a unit used to measure the trading volume in Forex. For instance, one standard lot in Forex equals 100,000 units of currency. Additionally, there are smaller lot sizes such as mini lots, 10,000 units, micro lots, 1,000 units, and nano lots, 100 units. PIP and point. PIP. A PIP is a unit used to measure changes in currency pairs, typically located at the fourth or second decimal place, depending on the currency pair. Point. A point is smaller than a pip, found at the fifth or third decimal place. 1 pip equals 10 points. Example, the EUR/USD pair has an exchange rate of 1.03975. The number 7 in the fourth decimal place represents a pip, and the number 5 in the fifth decimal place represents a point. The value of a pip depends on the trading volume. For a standard lot, if the EUR/USD rate changes by 1 pip, 0.001, the value will be approximately $10. Bid, ask, and spread. Ask. The price at which you can buy a currency, always higher than the market price. Bid. The price at which you can sell a currency, always lower than the market price. Spread. The difference between the ask and bid prices, which is the transaction fee charged by the broker. Example, the GBP/USD pair has an ask price of 1.25778 and a bid price of 1.25765. The spread is 0.0013 USD, equivalent to 1.3 pips. Trading tips. Trade major currency pairs. These include EUR, USD, GBP, USD, AUD, USD, NZD, USD, USD, JPY, EUR, JPY, USD, CHF, and USD, CAD. These pairs have high liquidity and stable spreads. Prioritize higher time frames. Charts like H4 or D1 reduce the risk of stop-loss triggers caused by minor market fluctuations. Lower time frames like M5 or M1 are more susceptible to noise. Choose a reliable broker. Platforms like Puprime or IC markets often provide stable spreads and good liquidity. Avoid trading during low liquidity periods, especially early in the morning when the US and Asian sessions overlap, as spreads tend to widen during these times. I hope these insights help you understand Forex better and provide a strong foundation for your trading journey. Don't forget to like, share, and subscribe to my channel to motivate me to share more exciting insights in the future. Thank you for watching, and see you in the next video.